How's everybody doing today? Hear what? I just turned the volume down on that one. Because then you don't want it feeding back. Alright. Let's get into this video. Didn't really want to make this one, but there is some things that need to be addressed. So let's get into that. Come on, hotkey. Why does that one always take 2 hits? Hey, guys. Welcome back to Surely Sound Studio. My name is Martin. You can call me Marty, and this is my show. So let's go. This is not a video that I wanted to make, but we need to address some things. We have some urgent things happening, and a general attitude shift is in need, I think, for... Well, I mean, honestly, mathematically, everything's stacked against us. But I think with the right attitude and approach towards what is about to happen over the next decade, we can come out better on the other side. It is possible, but it is definitely going to take the right approach. And the right approach is definitely us focusing on what's important, okay? And now, sorry, Canada got silver. I was up at 5. I watched it this morning, right? Pacific time, game was on at 5 a.m. And how many Canadians were up at 4, drinking and getting ready for the hockey game? They were so committed to this hockey game. Why can't we commit to like macroeconomics like this? Why can't we all get together and understand what we need to do on a global scale to compete in the G7? Like, come on, you guys. It's a hockey game. It's a game. It's a game. And I get it. The country was built on this game, blah, blah, blah. Well, we need to start looking at real numbers here and real economic data. And we need to start rallying together like we do for a game to pay attention to reality. Please, I beg of you, for your children's sake, pay attention, okay? And we're going to start off by talking about this little video that we're going to watch and break down. And then we'll get into some Bitcoin price action because we all want to know what's going on with Bitcoin. But trust me, what this video is about to show you will lead into the Bitcoin. So we'll get back to that. So let's start by watching this video and breaking this down a little bit. I think I'm going to pause the music here. Hey, can you go color, please? I'm trying to get something done here. I'm trying to save the world. So I'm trying to make a life better for the little ones because our grandparents developed and made a lot of money and did well, but those that didn't, the families are now suffering, and those that did, it's obviously the massive wealth inequality is happening now. Our grandparents' generation or your parents' generation, depending on how old you are, set the scale without future generations in mind. They took care of themselves. Those that were educated made sure that they took care of their family as well, but not a lot of people were educated on how this monetary policy was going to play out, although a lot of them knew exactly what was going to happen when they started doing it. But they did not inform 99% of the population what was going to happen in 100 years. And so here we are now with a massive wealth gap. And so what's happening? Let's see. So actually, this is another thing too. So I shared this and I said, how accurate is this information? How long do these people have before their way of life is gone forever? What can they do to protect themselves, right? Hey, Grok, asking AI, yo, bro, is this real? And what did it say? No, is that it? Where's the... All right, anyways, come on. Oh, it's down here. Is it this one? No, that's how you... Oh, yeah, right. That's how you comment. You got to click on it. Let's see. The info has bias, but exaggerates. Okay, so there you go. Canada projects 4,000 restaurant closures and blah, blah. Okay, so there's some information there. Let's watch the video and then come back and see what it says. Always double check your shit. Always do your research on many different things. I do like this about X, though. It's like I just ask Grok everything. Hey, is this real? Hey, is this AI? Hey, can I trust this? Right? Always do that as much as you can. And then as also though too, still be skeptical because I've definitely got answers that aren't 100% accurate or, you know, I don't know. You got to be skeptical of everything. But let's just watch this for informational purposes only.
3 nations spread across...
Okay.
This is Canada, the United Kingdom, and Australia. 3 nations spread across 3 different continents. But despite the distance, one alarming truth connects them all. They are collapsing in exactly the same way. And now, the symptoms are impossible to ignore. Let's begin where the cracks are turning into a full-blown collapse. Canada. In Canada today, the average family can't afford a home in their own country. Home ownership has crashed 31% in a single generation. Compounding this issue, foreign buyers now hold a significant stake in the Canadian property market, owning up to 13% of it, more than at any point in history. But Canada isn't alone. In Britain, the foundation of the middle class has been gutted. Manufacturing jobs gone, down 46% since 1990. And what did families get in return? The highest tax burden since World War II, all while public services fell apart. But this isn't just a British problem. Across the world, Australia is living the same nightmare, only deeper. There, a quiet takeover is underway. Foreign corporations now control 80% of the country's critical resources. And the dream of home ownership, dead on arrival. Housing prices have soared by 500%.
It's funny how it says foreign investors. Who are these foreign investors? It says the same thing for Canada and the same thing for the UK. Who are these foreign investors? It's just people. I think we were talking about this before, but like, remember those global, trans-global people that don't have citizenship to a certain country, that control all the money? They would be foreign, wouldn't they?
While wages crawled just 80%, young Australians are being priced out of their future in their own country. And this pattern across continents, across governments, is no accident. This isn't just failure. It's not bad luck. It's called managed decline, and it's happening by design. And if you're watching this thinking it can't happen here, you need to pay attention, because these 3 nations are the test cases for what's already occurring throughout the Western world. What you're about to learn in this video will completely change how you understand what's happening to these once powerful nations, and why everyone should be deeply concerned about what comes next. The evidence is hiding in plain sight. Government documents, insider testimonies, and statistical patterns reveal a blueprint that's been quietly unfolding for decades. And once you see it, you can't unsee it. Most people have no idea that the collapse of these 3 nations follows a familiar historical pattern. Every empire throughout history has fallen in a similar way, from the inside out. Take ancient Rome. Most think it fell to barbarian invasions, but Rome's real decline began internally, through economic inequality that mirror what's happening across Canada, the UK, and Australia right now. By the 2nd century AD, as Rome's expansion slowed, the wealthy elite created massive estates worked by imported labor. This destroyed local Roman farmers, the backbone of the Republic, who were crushed by debt and displacement. Sound familiar? It should. It's the exact same pattern unfolding today. When Roman reformers tried addressing these inequalities, they were eliminated. The elites chose to get rid of
Right? Okay, so we've talked about this before, is currency debasement, right? This is the managed decline thing is like the bias thing that it's talking about. Managed would imply that somebody is doing it on purpose, right? I think personally, it's just because of the monetary policy, we continue to print money, assets go up. This is what happens over time. When you start to dilute anything, it's going to affect everything, right? And so the thing that we all use as a medium of exchange is being diluted. This is what effect it has. We've seen it time and time again. It's referring to the Roman times. It happened in France. It happened in whoever had the main currency after that. The same things happen. The younger country rises to power because it's got a strong dollar, because there's not a lot of it yet. And then once it hits its peak, and now it's just basically when the interest on the debt becomes bigger than the amount of money that the country makes that year, that's when it's officially over. That's the official top, if that makes sense. Basically, they're paying just as much interest as they are making, then that means they're not going. And that's when the incline hits its top, and now the decline has begun. So this is already happening. The interest on the debt is more than what the countries are making. And this is honestly for the United States too. So this video is a little bit, this is clearly just an AI made video, but you got to understand that like the general idea here is onto something that needs to be paid attention to and needs to be addressed. Let's see what else we got here.
Reformers rather than give up their power. A key point to remember as we look at what's happening in these modern nations. Just as Rome faced demographic collapse in its final years, these three nations are experiencing unprecedented population shifts, despite Canada importing over 480,000 migrants in 2000.
Well, that's kind of funny. But this is true because the only reason that the countries have been able to maintain the positive GDP is because they're importing people. They need to bring new investors to the Ponzi scheme, right? That's how it works. Old investors get paid by new investors. To continue to make the numbers look like they're okay, we need to bring people in. So that's why you see mass immigration all over the world, because if you aren't from that country, the government will pay you to come. And the people that live there pay taxes so that the government can give them money to the immigrants so that they can continue the Ponzi, right? The people don't get it. They're like, why am I paying taxes for immigrants to come? It's like, well, they're maintaining the value of your house, right? You're paying taxes so that the value of your house doesn't crash, so that the money that you're borrowing against your house can continuously be refinanced, and you can owe less than 50% of your debt and continue to borrow money with the incline of the asset, right? So this is how the Ponzi scheme works. And so as long as they're bringing in new investors to pay the old investors, it continues to work. So as just like money needs to be moving to work, money is like water, right? If it sits, it goes bad. It needs to be moving. Okay. The humanity is like water, and they need all this, the way they've set it up anyways. It doesn't need to be like this, but the way that they've set it up is that people need to continue to move around for this system to not collapse entirely. And so it's basically built on nothing if you haven't figured this out by now. But like, we need to change. Things need to change. And whether you want to or not, it's gonna happen, for better or for worse. So you need to be paying attention and position yourself properly for the inevitable.
2024 alone, its fertility rate has plummeted to just 1.48 children per woman, far below the replacement level. The UK's fertility rate has crashed to 1.44, while Australia's sits at 1.5. These countries aren't growing naturally. They're being artificially repopulated while their middle classes vanish, exactly as Rome's did before its fall. Managed decline might sound like boring corporate jargon, but it represents one of the most dangerous concepts in modern governance. Originally a business term for companies beyond saving, it evolved into a strategy where maintaining appearances takes priority over actual solutions.
Maintaining appearances takes priority over providing actual solutions. Does that sound familiar? Hockey game, maintain appearance, right? People all rally together at 4 o'clock in the morning to maintain appearance and not to provide solution. We got to change where our attention is being set. You guys, come on. We could do better than this. We lost the gold anyways. Did anybody throw their silver into the fans? Their silver medal? I don't want this into the fans like that guy did last time.
This isn't conspiracy theory. It's documented policy.
The concept emerged during the 1980s in Britain when Margaret Thatcher's government advised that struggling industrial cities should be left to manage decline, controlling the collapse rather than preventing it. But what's truly shocking? This localized strategy has now been scaled up to the national level across Canada, the UK, and Australia, and the evidence isn't hidden. It's being announced openly. Don't believe it? Just look at the official messaging coming out of these governments. Their infamous "you'll own nothing and be happy" rhetoric wasn't just a meme, it's becoming the reality for millions. In Australia, government reports warn of a generation of forever renters as home ownership slips out of reach for younger Australians. In Canada, nearly a third of people under 40 now say they expect to rent for life, according to recent surveys. And in the UK, a 2025 policy paper declared that the era of mass home ownership is over, signaling a long-term shift away from traditional property ownership. If this is your first time hearing about managed decline, prepare for a rude awakening, because once you understand how it works, you'll start seeing it everywhere. And nowhere is it more obvious than what's happening to Canada right now. Canada presents itself as a progressive, independent nation. The reality? It's being transformed back into a resource colony before our very eyes. Here's the playbook being implemented with frightening precision. First, domestic production gets strangled. Since 2009, business investment per worker in Canada has fallen by 20%, according to Statistics Canada, part of a broader trend tied to weaker market competition. Meanwhile, productivity has stagnated. Canada also recorded only 1.1% growth in real GDP per capita between 2014 and 2024, making it the second worst performer among 38 high-income countries. Second, the market gets flooded with new consumers. Canada now has the highest population growth in the G7, with 98% coming from immigration. This creates artificial GDP growth on paper while masking collapsing living standards. Meanwhile, the housing market has detached completely from economic reality. The average Toronto home now costs 11 times the median household income, more than double what financial experts consider remotely sustainable. Young Canadians aren't just unable to buy homes, they're spending up to 60% of their income on rent alone. The numbers are staggering. In March 2025, the average home price in Toronto hit $1.4 million, while Vancouver topped $1.7 million. Meanwhile, the median annual income in these cities hovers around $100,000. The math simply doesn't work anymore. And who's buying these properties? Foreign investors purchased tens of thousands of Canadian homes in recent years, with many left empty as pure investment vehicles. In fact, things got so bad that the federal government extended its foreign buyer ban to 2027.
Drive around Vancouver, if you ever do go to Vancouver. There's lots of buildings like these, and you drive by them and you look on the balconies, and there's nothing on any of the balconies. Nothing. Like maybe one or two balconies will have a thing on it. Why do you think there's nothing on the balconies? On any of the balconies? Because nobody lives there. They don't care that nobody lives there because they make money holding the asset. They build the building, they get the tax write-off for all the money that's invested into the economy, but then nobody lives there, so they didn't build it to actually provide homes for people. The homes, the little unit's too expensive for anybody to live, to anybody to buy, to stay. They're literally just building it to create more assets because they have so much money they can't hold it in cash, right? So they need to continue to let the water flow. Is that a Shirley Sound S? That's dope. But this is what we have come to, right? So we can't steal.
Statistics Canada data shows that non-residents owned about 7% of condos in British Columbia and 5.6% in Ontario. Clear evidence that investment demand has distorted housing supply. But wait, you might be thinking, isn't this just normal economic evolution? Think again. Most Canadians never even noticed when, back in 2015, former Prime Minister Stephen Harper publicly dismissed the middle-class prosperity platform as outdated. At the time, it sounded like political posturing. But in hindsight, it reads more like a warning, because what followed was a slow, calculated dismantling of the economic foundations that once upheld middle-class life in Canada. But here's the truly mind-blowing part. Canadian policymakers aren't failing to solve these problems. They're just ignoring the inevitable. When asked what happens if Canada's housing bubble finally bursts, analysts warned that it could trigger a financial crisis with ripple effects far beyond real estate. As Jacobin notes, Canada's housing market has become a tinderbox propped up by speculation, lax regulation, and blind faith in endless appreciation. If the bubble pops, it won't be a surprise. It'll be a disaster foretold. That's right, the system isn't broken. It's working exactly as designed. If you think Canada's managed decline is shocking, just wait until you see what they've done to Britain. It's the same blueprint, just a more advanced stage. And what you're about to discover will make you question everything you thought you knew about modern economics. The United Kingdom, once the workshop of the world and birthplace of the Industrial Revolution, is now experiencing the fastest deindustrialization of any developed nation.
What? That was it? I thought it was longer than that.
This is Canada, the United Kingdom, and Australia.
Well, anyways, we're talking about Canada. There's obviously more to that somewhere, but we were talking about this before, right? Like this is where the industrial revolution started, right? And then we import jobs. So basically, we export jobs elsewhere because it's cheaper to cheap labor, right? So the world works on a global scale. The West is the consumers. China is the workshop. Japan is the bank. Japan loans money to the West. The West uses it to buy money from China, and then of course, China gets resources from whoever it needs to build the stuff from all of us. But ultimately, that's how it's set up, to keep the money flowing. on a global scale. But this is how it has effect on the people that are in these countries. So what we really need to do here in Canada is drop the I'll just get a new one mentality and pick up the I'm going to fix what I have mentality. Because when you just go get something new from the store because you can, you're most likely getting it cheap. You're most likely getting it from another country, and you're not keeping your money in your own country. When you have the I'll fix what I have mentality, you either fix it yourself with things that you can try and buy locally. Hopefully they come local. But either way, if it doesn't come local, you're not spending as much money out of the country. Or you hire somebody local to help you fix that thing. So therefore, the money that you pay them, hopefully a little bit, stays local. So just trying to keep the money local, which we can still keep it like water. We can still keep it working, right? But the thing that's having an effect is the asset prices are going up because they have to print money to bring new investors to the Ponzi. The tax dollars, we don't make as much money as the interest payments are. So it just mathematically does not work. There's no money left to go anywhere. When people talk about, oh, your tax dollars go here, tax dollars are 100% going to interest. Look at the books. They used to talk about balancing the budget. They don't even talk about it anymore because it's mathematically impossible and nobody seems to care. Nobody seems to care anymore. But that's really what is the main problem of everything. Everything is falling apart because everything's becoming more expensive because the money is eroding. Eroding. Is it here? Where's Grok? Info is biased and exaggerated. Has some bias but is exaggerated. Manage decline. Way of life. No fixed timeline for a way of life ending. Economics adapt. So that's good. But yes, to protect, diversify skills, income, build savings, invest wisely, engage in community policy advocacy. So like, you know what I mean? Like it's the small town mentality is what we need to thrive. The small town mentality where everybody knows each other and everybody is, is held accountable for their actions because everybody knows each other is what works. But when we get too big and people can start hiding behind things, that's when we have issues. And so there's not enough trust. And we know that this guy right here is fully transparent and decentralized and relies on trust and is built on trust. Something like this is exactly what can be a solution. So when it says invest wisely, do your own research and figure out how things are doing. Go back and watch the last video that we did last week if you want to have some comparisons to wise investing in 2026. I think it was called something like that. Go check it out. But anyways, check this out, screenshot this, or pause here for a bit and just read this because this is how money printing works and how it doesn't benefit anybody. And all they have is a plan to raise taxes to benefit the situation, but obviously that's not going to work. So Consuela says, no. And of course, this was a written response to this because I don't think that that's going to happen. Nobody has any money because of this is what I was trying to get at.
Even just for that alone, like why would you want to hold the more dollars they print, the less value it has. Even just for that alone, like why would you want to hold dollars long term if it's literally losing value because they're adding to the supply, losing value
Eroding.
Supply, losing value because people aren't trusting it anymore, losing value because it doesn't make sense in a digital era that we are currently living in. There's just so many things stacked against the dollar. Why would you?
Yeah, no.
Right. Doing research. Follow me on X if you want to, or don't. But yeah, man, mentality's got to change. We talked about this. We've been talking about this all year. Plan for 2026 is to work hard. Maybe it's time to pick up another job. Maybe it's time to spend a bit more time growing and a little less time just consuming things on screens. If you don't, basically this is your chance, right? Because if you don't, it's gonna get harder. Things are going to the simple quick gratification is going to lead to your demise. Convenience kills. If you understand delayed gratification and you work towards bigger goals, this is your opportunity to thrive. We are in an economic plateau. Will there be a crash? Who knows? It's probably like nobody really knows. Let's see, what are we doing here on the 5? Yeah, like this is the daily time frame from the top. Again, this is Bitcoin, and we pay attention to Bitcoin because it is a leading indicator of what is happening because it's liquid. You can buy and sell Bitcoin 24/7, 365 without any broker or anybody needed. You just put it on an exchange and sell it, or buy it. So it's the most easy accessible asset any day of the week. So this is going to be the first thing that people are going to sell when they're scared, and the first thing they're going to buy when they're greedy. So this is what we watch for a leading indicator for the rest of the markets. And so right now we are, we had our all-time high back in October. We have come down now, and we're in our DCA zone that we waited so long for. But look, like we're coming down, we're flagging, and now we're breaking down from this flag. So if you look at the previous top in November 2021, we come down, we consolidate, we come down, we make a little flag, like, let's see, what was this? This was November. So if we go October 21, November. So maybe we're a little bit behind, or a little bit ahead of schedule, whichever way you want to look at that. This, I think we already had, because we had the drop in the consolidation. And then, so now we're kind of in this little, maybe we're right here. Maybe we're right here now, where we've kind of dropped. No, because we already dropped out of that. I mean, it's obviously not going to be perfect. That would have been there. So it's not going to be perfect, but yeah, we're probably somewhere around here, right? And so we're going to see sideways and down and sideways and down. Like, there's just going to be one thing after another that the news is going to tell you, but I'm telling you before it's happening, just based on numbers, right? The news is there to try and make you believe they know what they're talking about, and that you should come back and watch tomorrow because we really know what's going on here. We got a story for every incident, right? It's like they're making that up as it happens after the fact, just to tell you something, to gratify. I don't know. It doesn't make any sense to me. Pay attention to the charts, pay attention to the data. You already know what's going to happen before the news, because you're getting your information potentially at the same time they are, before they can twist it. You know what I mean? Like before it can be regurgitated and held by any left or right bias or up or down or whatever the hell you want to, direction you want to pull it. But this is what it's saying here. Like we probably are going to be going down and sideways for a little while. And, we've got our DCA zone that we've had on here for, I don't know, a year, probably over a year now. After this box, probably put it up in here somewhere. We'll wait to come back down. And it's crazy how I put it way over here, but it wasn't pretty far. I wasn't far off. It entered that box only within a couple of weeks of where I put it, and then I still have this one down here. And so, we could go sideways, we could go down, we could go back up, we could go sideways, probably play around in this range. And this goes all the way to October this year. And so this is kind of what I'm expecting to happen. If we do start to see any sort of large pumps, we're going to be met by a lot of resistance up here. So we have to keep that in mind. If we do see some sort of break of structure here and things start going up, I am going to be very skeptical on this being the bottom or maybe here or here until we really see a reason for monies to start flowing back into people's pockets. People need to work hard to be able to invest money, right? Like, and this is an investment. This is what you're trying to save your money, save your value in, so it can grow over time. And if people are forced to spend their entire paycheck, well, then there's not as much money going into stuff like this. So there's a reason why last year I was screaming take profits, because we could see that this was more an artificial prop up than an actual investment backed move by the people. We knew that interest rates were I guess they were going down, but they paused. So they were going down and prices were going up, and then they paused. And now interest rates are still paused and they're talking about going down a bit more. So maybe we see a little bit, but like that's really what we got to pay attention to as far as like where we want to be in the future. Ultimately, though, we know that with money printing, it doesn't matter really how it gets here. It will eventually get here because, unfortunately, the money, back at the money printing benefits the higher ups first. So whether these people are putting their money into it or these people are putting their money into it, eventually they will. But the thing is, you have to keep in mind is there's a lot more of these people than there is these people. Okay, these are the very, very few. These are the very, very more lots. There's a lot more. Few? I don't know. What's the opposite of few? Put it in the chat. Help me out. Come on, guys. I need some help. I'm just trying to get the conversation started, But honestly, so whether it's these people or those people, eventually the money will find its way there. But the thing is that these people make up such a large number of the population that it only takes $10 or $15 per person to have the same amount of money as one of these people can. All right, 1 or 2, 3 of these people can. So we have the power, we have the numbers, they have the money, but we together, if we stay united, or if we become united or get united, or however you want to look at it, we can maintain the power. But ultimately, when it comes to Bitcoin price, I think that we're just DCAing. We're just chilling. We're DCAing. We're working hard. We're trying to provide as much value as we can. Or, if you need to take that extra job or whatever, put the screens down and pay attention to what you can to make your life better in the long term. Delayed gratification. Now is your chance to buckle down and not worry about being super satisfied and having dopamine hits every day. Oh, that sounds terrible. No, you can do it all. You can do it all. I mean, just have discipline. You can do it all. You can be happy. I don't know. It works out for me. But education is definitely what helps the situation, because if you know what's going to happen and then you say what's going to happen and you make a plan and you stick to it and then it works out, you're like, oh, well, that's cool. Let's do that again. But I do have to point out here on the short term, 2-week time frame here, lots of people coming in with longs. So that's another reason why we do have some people shorting. I am currently short. I took a short this morning and then added to it here, and it's okay. I was long yesterday, Thursday and Friday I longed. Almost from about the same entry too. That's why we take profits, because let's see, what day is this? This is Friday. Yeah, Thursday we longed, took profits, got stopped out, and then Thursday morning, right? Yeah, Thursday morning, long, took profits, got stopped out. Friday morning, long, took profits, actually added to it, I think. I added to my long here, took profits again, and then took profits again here, and then actually closed my long because of this breakdown here. I didn't actually get stopped out of this. I was like, oh, I'll just leave it to get stopped out. But I was like, no, I'd already opened a short. I'm like, no, I'm not schlonging this. Closed my long entirely before it hit my stop price. And now we're just holding a short. And if we go to the hourly time frame here, Sunday night. Yeah, like we were breaking down from this flag. The fact that we couldn't get back in right here just doesn't look very good. If you're a pattern trader, that's another thing though too, is like if you're a pattern trader though, the shorts are probably getting loaded in right now. So I don't know. This is another thing too, actually. This is only the hourly, but lots more money flowing, but price not. More money flowing, less money flowing, price lower, price much higher. And then not as much money, price even higher. So it's like the money flow is getting higher, but the price is going down. So it's not good, because the more money that's coming, what is this saying is more money is coming in, but it's being met with just as much sellers or more sellers, because the price isn't getting up there. So there's still a lot of people that are selling. There's still a lot of people that are needing to sell to pay bills. People are being forced to sell. That's the whole point. That's the whole point. People are being forced to sell. That's what the managed decline is. They need you to force sell so that foreclose so that they can buy it, right? So this is how the modern day slave system works. And if you don't understand that, you're going to be forever enslaved by it. It's not, I don't know, that big a deal. Pay attention to some numbers and you can figure it out. And like it's not like we're actually chained, okay? You're only chained by the lack of knowledge in the modern slave era. You can break free of those mental shackles if you want to. You are actually given a device that has all the information of humanity on it in your pocket. So it's up to you. It's just simply up to you to take the time to understand how this works, and you break free. The only thing that's keeping you shackled is yourself in this world. And for whatever reason, I mean, they're not going to do it for you. That's clear. You have to do it for yourself. Do your own research. That's the most important thing ever. If anybody is ever telling you anything and they're not saying that the most important thing is that you do your own research, you probably shouldn't be listening to them, because they're probably misleading you on their bias to try and take your money or manipulate you in one way or another. Okay, I am here to tell you that you should be doing your own research. I will provide you with some of the things that I pay attention to, but ultimately, knowledge is power. Knowledge is the way that you break free and you grow. So you know that they're not going to teach this to you in school. School is just babysitting. That's all it is. It's just a little bit, pretty much, school is pretty much just babysitting. They're just making sure there's a lot. We're not going to go down that one today. Maybe we'll talk about that another time. But ultimately, it's not there to let you really understand how the world works. It's there to make you a taxpayer, or I don't know. I don't really understand it. Homeschooling is pretty dope, though. Thinking about taking my kids out of school and homeschooling them. And that'll be a lot of fun. But yeah, we took the long because we had a nice trend here. It broke, and so when it broke, I took a long here, somewhere around here, and then when it retested, I took a long. So I think that was Thursday, Friday? Yeah, Thursday, Friday. And so, but then look at the same thing happened. We were making a trend, and it broke. So we couldn't hold this trend, and now we're breaking. And then that was also part of the perfect retest from this larger one too. So this is like, plus we have weekly money flow. Like, let's see if we zoom. Is it ticking back up yet? Is it ticking back up? No, in fact, it ticked back down. So this is actually very bearish, very, very bearish, which means expect lower prices. This VWAP coming up here is trying to give us a little something, but this does not look good for the weeks ahead for the Bitcoin. And of course, like we said, Bitcoin is the leading indicator. And so, yeah, it's king. You got to pay attention to what's going to do the best for you. Let's look at the Dow Jones, because people are asking me about it. The Dow. Look at the Dow. Well, honestly, let's see. It's starting to show signs of cooling off. That's for sure. This is the weekly time frame, so we're going back to a year ago, just under a year ago. Maybe we see something like this happen. Remember, though, it's not going to be a big deal if we do see these little corrections. Like, that's fine. This was 2022, which was a bear market. They even consider this to be like a little bit of a bear market here. But then, of course, October, we see the usual thing that you do in October. October, right? So capital will rotate. Money will move around. Like we said, it's like water. Ultimately, though, on the weekly, money flow is still high in the green. I mean, it's going one of two ways here. Ultimately, the markets are artificially propped up, so it doesn't really matter what happens. You know it's going to rebound, because if something happens, all they do is print more money to prop it back up again. So when certain things come down, we can DCA into them. But yeah, like the Dow Jones is over 50,000 US. And it was met with some resistance. Maybe that was a local top, 50,000. That's a pretty psychological number. Lots of people that have been holding for a long time might be looking to take some profits, balance books. Once the taxes are done here, maybe in March. After March is the first 60 days, or during March is after the first 60 days. So new year will begin. We might see some profit taking. We might see some people want to take some vacations as springtime comes here in the Northern Hemisphere. So yeah, I mean, there's not going to be a lot of reason for this to continue to climb much higher other than simple money printing. So I'm not buying this personally because I don't buy big green candles. My investment of choice is moving with the future to the digital era and the blockchain, where everything will soon be. And so I'm buying the blood. This is when you want to buy. We don't buy up here. This is when you want to buy down in here. Bitcoin's dead. Buy aggressively, not financial advice, but it's worked out every other time. But maybe it won't this time. Maybe everything will change. You never know. It could happen. S&P looking pretty top-ish here, falling below the 21, falling below the 21 here, and hitting it once, coming up to it right now. See what happens where we open tomorrow. But that's another thing to note is that before too long here, and I know on some exchanges already, S&P and all traditional stocks are on the blockchain and trading 24/7. So it's just another sign of what's going to happen. And then we were looking at the VIX a little while ago, and it honestly did look like more volatility was coming. We had sort of the flow coming up, RSI coming up. We had a low volatility hit here in December, of course, holidays, and now things are starting to pick up, and every bottom that we make is higher than the last. So the volatility index is in an uptrend right now. So something to be noted, because when we uptrend, these mark significant points in the market. This was October 25 when we were at the top for Bitcoin. This was November 25 when probably we saw that big dump, or when we hit there was big dump when we dropped like 30% or whatever in a day. And then that wasn't even a lot compared to the April crash that took a lot of the stuff out, those altcoins and stuff like that, all those low leverage positions that got wiped out that people thought would never get wiped out, right? So August 24, anytime the volatility index goes up past the 30 plus the 40 anyways, like something significant is happening in the markets and you should probably pay attention to it. So as you can see, we're not quite that high yet, but wouldn't it make sense for another big drop down, another one of these to happen, and then you see another one of the spikes in the volatility, and then people really think that, oh my goodness, man, Bitcoin is dead, this is over. Bitcoin's down sub 50K. Bitcoin is sub 50K. Can you believe it? It's like, of course I can believe it, man. Fuck. Our last bottom was $15,000. All we need to do is make a higher low and we're good, bro. You go to $16,000 and I'll see, like, well, I got myself a couple Bitcoin finally. Just try to make sure I don't lose it in a surfing accident this time, right? Like, don't worry. I mean, that's not going to happen because the money printer won't let it. But ultimately, that's the view you have to have. Anytime something like an asset of any kind goes on sale, you want to be buying it because ultimately we know what's going to happen with the money that we compare everything to. Let's look at this guy one more time because I want to keep an eye on this. Damn, it's still going up. Haven't bought any of this yet, but I want to buy some of this. Vanguard Canadian High Dividend Yield Index ETF. If I had $1 million just sitting around, dang, I'd say I'd put it in here right now, but I wouldn't. Maybe DCA, small amounts DCA. I can't buy this right now. It's a good investment, but it's just like, man, very high on the RSI, not as high on the RSI, price going up, strength going down, money flow going down. There's some sort of sideways price action and or lower prices need to happen for this. But again, it's like the technicals all go out the window once hyperinflation hits, folks. Like, you got to understand this. Anything can happen at any time now because the money printer is just digital. Like, they don't actually have to print money. They just hit a button and it prints, right? They just click it and it prints. So when they print money, they're printing it for themselves. You need to understand that. So if you pay attention to it, you can also print money for yourself by investing and borrowing tax-free. And that's basically how you print. How's gold doing? Ooh, gold's back over 5,000. Gold's on another tear. Goldilocks. Look at gold here. Dang. Man, look at the volume on gold. Just still consistently aggressive. That means a lot of people are buying. A lot of people are selling. A lot of transactions in gold happening all of a sudden. Interesting stuff, folks. What a time to be alive. What a time to be alive. How long have we been going for here? About almost 50 minutes. This is much longer than I wanted to talk about. But yeah, now's the time to pay attention. Now's the time to understand that the system is what it is, regardless of what you think or someone's told you. Do your own research. Figure it out for yourself so that you can benefit from the money printer. It's not fair that we don't all get to benefit from money printing. Why? If we can just print money, why aren't we all just rich? If we can just print money. Why? Well, because you have to invest in the system. If you invest in the system, it makes you rich and money printing works for you. If you don't invest in the system, well then the money turns into sand. Turns into sand. This is what happens to the money. Eroding. All right, folks, I'm out. Have a good one. Love you. Peace. I recommend putting your opinions aside and learning how to think logically